Hello students, you are welcome to today's class, and in today's class we want to be looking at the meaning of journal. We want to look at the reasons for journal book, as well as we'll be looking at the types of journal, and also we'll look at how to prepare all the special types of journals that we have. Now, what is a journal? A journal is a book where transactions are recorded first before posting to the ledger or other books of account. So a journal is a first point of contact for transactions. Whenever there's any transaction in an organization, the first place where such transaction will be recorded is the journal. So it's a first point of contact for all transactions in a business organization. And as human beings, that we can have more than one name. More than one name. A journal also has more than one name. So if you don't want to see journal as special journal, you can also refer to it as book of original entry, or you call it subsidiary book, or you call it a prime entry or book of first entry. So before any entry can be made in the ledger, it must be first recorded in the journal. Now, what are the reasons for journal book? The first one is to know the total sales and purchases. So if you want to know the total sales and purchases in an organization, that the total items sold and the total item bought, the journal book will serve that particular purpose for us. Also, we use journal for first entry of transaction. That's why we say it can be used as books where entries are first made. Also, one important feature about journal is that it gives explanation to every entry made. For every transaction recorded in the journal, there's always an explanation, there's always a narration attached to the transaction. So if at any point in time we want to know the reason behind any entry in the journal book, the journal will give us the reason behind such posting. Also, one important feature again of journal is that through the general journal, that's the particular one I'm talking about, is the general journal. Through the general journal, we can know which account is to be debited and which account is to be what? Credited. And also other day books at the end of preparation, we can know which account to also debit and which account to also credit. Now, what are the types or divisions of journal? We have the first one we have is the sales day book, which is also referred to as sales journal. We have the second one, which is the purchases day book, or you call it purchases journal, or you refer to it as bought journal. We have the sales returns, or you call it return inwards journal. We have the purchases return, or the return outwards day book. We have the cash book, or you call it cash journal. We have the next one, which is the petty cash book, or you call it the last one, the general journal, or you call it principal journal or journal proper. Now we want to look at the meaning of each type of the special journal we have outlined earlier. Now we want to look at the meaning of sales day book. A sales day book, or you call it sales journal, is a book that we use to record goods sold on credit basis. Now, what is credit basis? Credit basis is a situation, or you see it as a system whereby payments for items are not immediately, meaning you are paying at a later date. For instance, you bought an item, and you know the normal rule is when you buy, if you go to the market after buying, the next thing you have to present your means of payment. Either are you using a check or you are using your credit card, whatever you want to use to pay. But when it comes to credit basis, we are looking at a system where you did not pay immediately for that particular item. You have to pay at a later date. So now, items that are sold in a business organization and the customer did not pay immediately for such items will be recorded in the sales day book. Now, one important feature again you need to know about the sales day book is that the sales day book will only record credit sales made in the business, and the sales are all the daily sales made on credit. Now, the sales day book will not recognize sales of fixed assets on credit at all. It will not appear in our sales day book. What are fixed assets? We are looking at resources owned by a business, that's the properties owned by a business, such as their furniture, which includes their table, chairs, their cabinets. We are looking at their motor vehicle, the office equipment like your computer system, your typewriter, your photocopying machine, or your scanner, all the printers, all the equipments in an organization. If any of them are bought on credit, it will not appear in the sales day book. If anyone, that means in a situation where you sold any of them on credit, it will not appear in the sales day book. Only what will appear are items of goods, normal stock of goods that will appear, but anything that has to do with asset will not appear. And any item sold and money was received immediately will also not be recorded in your sales daybook. Now the next one we have is a purchases daybook, or you call it journal. And this daybook is used to record all credit purchases, meaning all goods bought on credit from the supplier, which is meant for resale, are recorded in the purchases daybook. So every item bought that's on credit will be recorded in this purchases daybook. But any item bought and payment was made immediately, or we bought any fixed asset on credit, it will not appear in your purchases daybook. Now the next one we have is your purchases returns, or you call it return outwards book. And what we use this book to record is all goods that were previously bought on credit but now later returned to the supplier by the buyer as a result of one reason or the other, like poor quality, damages, or wrong description or type. So if there are items that have been previously bought on credit, and as a result of one reason or the other, these goods have to be returned back to the supplier, such items will be recorded in your purchases returns outward book. The next one we have is the journal proper, or you call it the general journal or principal journal. Now we have some transactions that cannot fit into other subsidiary books. So such transactions that does not have any place in any of the other subsidiary books are usually recorded in this general journal. That's why we say journal proper is used to record transactions that cannot fit into any of the subsidiary books. The transactions that cannot fit into cash book, cannot fit into sales daybook, cannot fit into purchases daybook, and cannot fit into returns inward daybook or return outward daybook will be accommodated in this general journal. And this general journal usually have columns for dates, particulars, folio, debit, and credit. Now the next one to look at is sales returns or return inwards journal. And this journal is used to record all goods previously sold to customers on credit but later returned to the business either in whole or in part due to any of the following reasons. It can be wrong color, it can be wrong type of goods, it can be inferior quality or breakage, defective goods, or damaged goods. If we have any of this reason and the customer had to return the goods back to you, that means the customer initially bought the goods from you and you sold it on credit without receiving money but at a later day, and the customer has to return the goods back to you. Such items will be recorded in our sales return journal. The next one we have is the cash book. And cash book is one of the subsidiary books, also is a book of original entry as well as a ledger that is used to record all cash transactions. It's a book where all cash receipts and payments are recorded. It's a book used for recording receipts and payment of money either in cash or check. So if you have any of this situation that has to do with we either bought goods and we paid immediately for it, or we sold goods and cash was received immediately, such items will be recorded in your cash book. So that is why this cash book essentially is for transactions where payment was made immediately. So either you sold the items and they paid for it immediately, or you bought an item and you paid for it immediately to be accommodated in the cash book. Now, how to prepare a day book? What are the steps? The first thing you are expected to do is to write the name of the business. And if it's the name of the owner, maybe it's a sole proprietorship business, the name of the owner will be given to you. You write the name of the owner. Then the next thing, you write the title of the day book. We need to know the day book you are working with so that we'll know if it's a sales day book or a purchases day book. Then the next thing for you to check out is in your question or the illustration given to you or the exercise given to you, look for transactions that are classified as sold. Any transaction that is under the heading sold, we sold, so sold item, we sold this. Every item classified under sold will appear in your sales day book. Why every item classified under the name bought or purchased will be used for purchases daybook. Then transactions that are classified as returned will be for returns daybook. Now we have two types of returns. We have the return inwards and the return outwards daybook. So how do you know which one will go? Now if you have any question that has to do with a customer returning goods, back to the seller, such items will be recorded in your returns inward daybook. But if it's the seller that is returning goods back to his supplier, such items will appear in your return outwards daybook. Now, this is how a sales day book looks like. You see, the name is there, Aku Raymond, and we have the title of the account as sales day book. Now, the date column here is to record the date in which the transaction took place, and then the particulars column is for us to recognize the name of the buyer and the items that were sold to this buyer on credit. These items will appear under the particulars, while the details column is usually for items that when we have more than one item being bought by a customer, we now want to have a means of getting a total sum of all the items bought. Everything will appear under your details so that you can now have an overall total in your total column. So now if you see the customer here that bought goods on credit is Mr. Obina here, and these are the items he bought on credit. So how did we get this 3,500? It was simply 50 rulers multiplied by the price for each one, for each ruler you have. So that's why we had 50 times 70 will give you 3,500 naira. The same thing is applicable here. 80 times 90 will give you 7,200. That's how we got it. And if you do 10 times 120 to give you 1,002. So that's how we got everything here. So at the end of the total purchases, the total item purchased by Obina and the items which were sold by Aku Raymond to Obina, the total item is now what, 11,900. Then if you check here, we have Chime Angelica here is also a customer who bought items from Raymond, and so meaning Raymond sold these items to her on credit, and that is why it is appearing in his sales daybook. So all the customers that items were sold to them on credit will appear here, and if they will use the details column, if the item is more than one, you will use this to represent so that you can get a total amount to appear in your total column. The next one we have is the purchases daybook, and you see the name of the owner, which is Aku Raymond, and we have purchases daybook as a title. The date column is to recognize the date in which each of the transactions took place, while this particulars column is to recognize the name of the supplier who sold this item to Aku Raymond on credit. So that Aku Raymond bought items from this person, Andrea here, and he also bought from Kosi. These two persons are his supplier, and these are the items he bought from them on credit. And you see that because the items were more than one, that is why the total column is like this. And now the first day he bought 100 rulers at the rate of 15 naira each, so 100 times 50 will give us 5,000. Then here you have 60 big notes at 7,000 at 70 naira, which will now be 60 times 70 will give you 4,200. Then 30 mathematical sets at the rate of 100 naira each will give you 3,000. So by the time you add up everything, you have 12,200 naira, and that's how we got. And the same thing is applicable for Kosi, and so that's how we were able to prepare the purchases daybook. So if you check this question or the illustration was as a result of these were items classified based on bought. So why the sales daybook is classified based on items under what, sold, when the purchases daybook was prepared based on items classified under bought. So thank you for listening to us. We'll meet next class. Thank you.